Dear brothers and sisters, I welcome you all to see this video message. Today, prophecy prayer point for tax reformation in our country. Reference for this prophecy prayer point from 2nd February 2022 Union Finance Budget. Disparity of wealth. In theory, India employs several mechanisms that are aimed at taxing the rich. This includes a progressive income tax rate structure, tax on capital gains, tax on gifts, and a surcharge on income tax on the super rich. But data has consistently shown that the rich in India are not paying enough tax. This is primarily due to the use of tactical measures to engage in tax avoidance and evasion. India creating more billionaires per year since 2018 than most other nations. A study by Oxfam India reveals India's top 10% of the population holds 73% of wealth. The total wealth of all Indian billionaires is more than the full year budget. India is categorized as a poor and unequal country in the latest World Inequality Report, with half of its people owning only 13% of nation's income. India is the fifth largest economy in the world. It is certainly not a poor country. However, India is also one of the most unequal countries in the world, and the state has failed to address these inequalities through adequate investment in education, infrastructure, and health by way of more equitable and progressive tax system. The lockdown imposed during the COVID-19 pandemic is a textbook example of how crises affect the rich and poor differently. While the wealthy have the luxury of sitting at home with families waiting for the worst to pass, millions of migrants are on the road walking side. Between March 2020 and November 2021, the wealth of Indian billionaires class increased from $334.97 billion to $719 billion. In India, hundreds have been named in the Bandora papers, the Indian super rich who tried to avoid taxes by parking their wealth anonymously in tax havens abroad. So, addressing the wealth inequality through the tax system in India is need of the hour. The wealth and income taxation policy in India is quite flawed. The government taxes labor, income, salaries quite heavily, but reserve a quick claw treatment for taxation of wealth and income therefrom. India currently not have wealth tax, and also rich people do not want to pay taxes on the incomes that their wealth generates. The capital gains on real estate and financial investment are quite low in India. In 1985, The estate duty law was abolished on the grounds of high implementation cost and administrative problem versus meager estate duty collection. While the per capita income of Indians has risen since liberalization, growth has failed to be inclusive. India is notorious for its benami system of holding properties. Properties held in fictitious names or under the names of others have been the bane of the Indian quest for equitable distribution of wealth and tax collections. An inheritance tax can potentially prevent the concentration of income and wealth in the hands of a few, reduce intragenerational inequality, promote intergenerational equity. Inheritance tax could contribute to bringing down inequalities of wealth across generations. Inheritance tax. The inheritance tax as a corrective measure for the malaise of the huge disparity in income and wealth rather than as a source of revenue for the exchequer. The concentration of wealth or power is not good for a stable and sustainable economy and may lead to economic unrest if left uncontrolled, that is Naxalite movement. For wealth inequality in India, the reasons are income equality, inheritance and asset value appreciation. USA has three types of taxes on estates and assets being passed on to the next generation, which are gift tax, estate tax and inheritance tax. In the United States, most states impose some form of inheritance tax in keeping with the national spirit that one must earn one's wealth rather than receive it on a platter on the death of one's parents. Many US states charge inheritance tax as high as 50%. Many individuals with high net worth are forming trust to avoid taxes. So one of the big reasons USA corporate founders such as Warren Buffett and Bill Gates partake in philanthropic activities on large scale is the grim prospect of the state eating into their estate after their death. India also should replicate like USA in implement inheritance tax. So inheritance tax should coupled with gift tax and would be 20% of taxing in a manner it cannot be evaded. For inheritance tax to function, robust mechanism that digitally validate real assets holding must emerge. Inefficiency in implementation and corruption were the major reasons behind abolishing inheritance tax in India. The tax collection was very meager and pronouncement of value on the assets were very subjective. But today much of the property records are digitized and inheritance can be tracked easily to a particular person. So taxing an individual will be much easier now. 51 billions are aged 65 years or above and control a staggering of rupees 10,544 billion of total wealth in the country. If it is assumed that in the next 20 years at least rupees 10,544 billion will be passed on to the inheritors, and on that, if you had 30% of inheritance tax imposed, the state can be earn at least rupees 3,176 billion rupees. Taxing the super rich to build the truly resilient India. The super rich means individuals have income more than 1 crore rupees in a year and companies with an income of more than 10 crore rupees. Wealth tax. Currently, India don't have wealth tax. It was abolished in 2015 due to cost incurred for recovering taxes was more than the benefit. The actual collection of wealth tax in financial year 2012 and 13 was rupees 1,008 crores only. But according to Credit Suisse estimates, India's household wealth was estimated at $12.8 trillion, growing eightfold between year 2000 to 2020. Wealth accumulation happens when the absence of taxation. Wealth accumulation brings corruptions as well. To put income and wealth in perspective, India's household wealth is more than 4 times its GDP. Wealth tax presently in Spain, Norway, Switzerland, Belgium, Argentina, Netherlands and Italy. The intention of wealth tax to bring parity among the taxpayers. An annual wealth tax of 2% on wealth over $5 million and 3% on wealth $50 million and 5% on wealth over $1 billion would rise 78.3 billion a year. A most progressive wealth tax could rise $122 billion to exchequer in a year. Expenditure tax over income tax. Personal income tax is effectively collected only from salaried individuals. They cannot evade taxes as these are deducted as TDS. The salaried class pays tax on the income and then spends the net income, whereas the non-salaried class spend money under various expenses heads and reduce their tax liability. The rich have dividends and capital gains as a major source of their income rather than salaries. Expenses on rentals, phone, electricity, domestic and foreign travels, water, entertainment are part of tax deductible expenditure for the businesses and professional category. According to the data of Income Tax Department, only 8,600 individuals have revealed that their annual income is above 5 crores. Above 42,800 people have declared a taxable income of over rupees 1 crore annually. Only 2,200 doctors, chartered accountants, lawyers and other professionals have disclosed annual income of more than rupees 1 crore from their profession. Big agricultural hardly pay any income tax. Even political parties not pay any taxes. As revealed by Prime Minister Narendra Modi at a summit in February 2020, only 1.46 crore individuals are liable to pay income tax, which is less than 1% of our population. it is general tendency among the people to evade tax. Tax planning or tax avoidance is considered a legitimate right to reduce tax liability. However, evasion is an offense. There is a parallel black money economy, blacked in shapes of properties and gold. Wealth, real estate, financial assets and business investment represent economic power and earned income. Most households, however, earn income by using their labor. Small proportion of wealthy households earn most of their income from their wealth. If personal income tax replaced by expenditure tax, then there will be no scope of converting genuine income into black money through tax evasion, and the entire funds will be available for productive purpose of the economy. In USA, although personal and corporate income tax provide the bulk of revenue to federal government, the consumption and expenditure taxes continue a primary source of income for state and local governments. India currently taxes goods and services produced in the country at 5%, 12%, 18% and 28%, with some essential such as food items attracting the lowest rate and sin and luxury goods ending up with highest levy. India must explore the option of replacing income tax with expenditure tax. The shift from income based to expenditure based will mitigate inequities of a non-comprehensive income tax and reduce extravagant consumption and promote savings to significantly larger extent. In India, based on data on consumption based surveys, even at household levels and trends seen within them, has been observed as a principal method for understanding and analyzing various kinds of inequalities. In practice, consumption is much easier to measure than income. Unemployment crisis. India's pre-pandemic employment population ratio of 43% was lower than global rate of 55% in 2020 as per World Bank data. The employment rate in Bangladesh is 53% and in China is around 63%. But as per Center for Monitoring Indian Economy estimate, India's employment and population rate is below 38%. This is not good for our country, which leads to unrest in societies. Around 150 million laborers moved back from urban cities to their rural villages during the first wave of COVID-19 pandemic in 2020. So, proposed the urban employment scheme should coupled with MSME, that is micro, small, medium enterprises and public institutions for giving the jobs for our educated unemployed youth for 150 days by the minimum wages of rupees 500 in a day will in a much better way to revive the economy in India. For instance, a total of 6.5 crore people have been given employment under Mahatma Gandhi National Rural Employment Guarantee Act scheme during the fiscal year 2021-22. Also, the scope of expansion of Mahatma Gandhi National Rural Employment Guarantee scheme for 150 days enhanced to revive economy in rural areas by the scheme clubbed with agricultural work with a minimum wages of rupees 400 in a day. By these two programs, we bring more masses of citizens in a social security scheme under health, pension, etc. By collecting the taxes from inheritance, wealth and expenditure, we can implement urban rural employment programs and ensure the minimum income support for people below poverty line. Conclusion. Article 39 of the Indian Constitution requires the state to direct its policies towards securing for all its citizens the right to an adequate means of livelihood, availability of material resources, and ensuring prevention of concentration of wealth, etc. However, data has shown that the state has failed to achieve the desired objective and inequality has been ever increasing. So, the government of India should listen to the people and make provisions for social security, health, education and well-being through the budget by tax reforms in India. I hope our BJP government will listen to the crying cries of poor citizens and disengage crony capitalized favored policies but makes the pro-poor policies for wealth disparity inequality free India. Amen. Bible talks about tax the super rich in India. In 2 Kings chapter 15 verse 20, and MGNREGA exacted the money from Israel from all the wealthy men, 50 shekels of silver from each man to give to the king of Assyria. In 2 Kings chapter 23 verse 35, he exacted the silver and the gold from the people of the land, from each one according to his assessment, to give it to Pharaoh Nego. Also in Romans chapter 13 verse 7, therefore give to all their due, tax to whom tax is due, customs to whom customs, fear to whom fear, honor to whom honor. So, kindly pray and prophesy in the name of Lord Jesus Christ that tax reforms should happen in India in such a way like this. Inheritance tax should bring again in India with 30% of taxing for super rich, that is having the annual income more than 1 crore rupees. And wealth tax should bring again as 2 to 6% for having the wealth accumulation from 40 crore rupees to 1000 crores. And income tax should replaced with expenditure tax to defend the poor and salaried people. And urban employment and Mahatma Gandhi National Rural Employment Guarantee Act, rural employment should bring with 150 days with minimum wages of rupees 400 to 500 days, clubbed with micro, small, medium enterprises, public institutions, agricultural work to increase the present population employment ratio of 38% to 68 percentage as developed economy for revive economy in rural urban areas by bringing the masses under social security schemes and minimum income support of rupees 2000 should given to all the families below poverty line by taxing the super riches in India. Amen.